Good evening and welcome back to Be Rich. And I have not been there for a long time. Today on a Saturday, I thought I will take your questions and answer them. Vinod.
Yeah, first I want to have some questions on macroeconomics,
Hmm.
right? So these are questions which our viewers have been mulling over, so I thought I'll ask this. This continued outflow of foreign institutional investors and domestic investors seem to be robustly investing, right? So what is this implication of this for us? Is it going to be, as Indian investors, if we're only looking domestically, are things going to be status quo for this few moments ahead?
No. Let us just be very clear. Even the Bank of Japan will start to increase interest rates. See, the question you asked me is very clear. What are the implications for the Indian market? That's how I understand it.
Yes.
Now we have to understand interest rates act as a gravity. So when the interest rates remain high, profits are going to come down. All your large companies have except those who are earning in dollars, are having a very difficult time in growing profits. It's an anemic growth. And therefore they are looking for lower interest rates. But the world seems to be moving in an opposite direction for a lot of macroeconomic conditions. In the sense that the US 10-year yield is at 4.6, it almost touched 5. And the 30-year yield crossed 5 very comfortably and is again pulled back. The British pound yield is also past 5. And it is now very clear that the Bank of Japan will also start to raise rates after 40 years. If you study the rate of interest rate cycles, globally the interest rate cycles have turned positive after many years. So you're never going to get a zero interest rate for some time to come. Now, whatever Trump policies that Trump is suggesting, inflation is going to go up again. He's going to reduce the labor force when there are a lot of demands for jobs and also increase tariffs. And China is depreciating its currency. So there is an economic war going on between US and China. And the new Treasury Secretary has said here that he prefers even tougher sanctions on Russia. So you are going to have two axes war going on between China, Russia, Iran on one side, and the US and its allies on one side. And interest rates are going to keep moving up or remain elevated for 1 year. Now, India is in a situation where it desperately wants to cut rates. If it cuts rates, what will happen is the interest rate differential between America and India is already very narrow. So if you cut rates, it will widen and more money will go away from India. And this will go into stronger markets. And now the strongest market is US. But even in US, you have to understand, US is now 70% of the world market cap, which is extraordinarily high. And 39% of that 70% is 7 stocks. So the world has never seen such a narrow top, which means that there is a possibility of a big correction in America. Right? As interest rates climb, the American stocks may correct, which will also affect Indian stocks. So there's a very famous saying, what the wise man does first, fools do last. If you look at the last 20-month SIP record of mutual funds published by AMFI, you will find most funds have turned negative. That is, if you had started a SIP 20 months back from now, that is now 23 December is the first time you started a SIP, not 21 December. So if you started sipping first time in 23 December and had no investment before that, you are losing money in most of the mutual funds. Also, so far till day before yesterday, what was happening is the large cap was falling, the small cap and the mid cap were not falling. In the 2 days when the market was up here, you had a massacre in middle cap and small cap. Now the small cap index is almost 15% down. The mid cap index is 15% down. And the Nifty itself is nearly 13% down. If this trend continues and there is no major big bang change in the way our economy moves, and the budget is not one, it's a one-day event, there is a possibility that we will hit 20%. That is the correction mode. That is 26,500 or whatever was the number. You take away 5,100 to be very clear. So you will come to 21,000. So if there is a possibility, the chances of the Nifty going to 21,500 is greater than the chances of Nifty beating 26,500 at this current economic scenario. This is what we need today. So the domestic institutional investors will lose money. This is what I believe.
Okay, so what we've come to understand in this is to keep an eye on interest rates, not only in India, globally. This will give you an insight on what will be happening over the next few months, especially when the budget is coming. So that would be as far as interest rates are concerned and what is happening. The next question which a lot of people are asking about, the dominance of the Magnificent Seven on the S&P 500, you've all been telling us for a very long time that it's very lopsided, and that's been a warning sign. So with this high valuations of the Magnificent Seven, and now that is tottering this Magnificent Seven, what will be the outlook for this S&P 500 and the US market?
I am not an astrologer, so I do not know what are the levels.
No, like Apple corrected by 5% yesterday.
So again, what I am trying to tell you is the big seven are nearly 40% of the market. If it corrects to say 50%, then the S&P also has to correct. Whether it will correct, I don't know.
Okay.
Because a lot of money is being piled in the passive funds.
Yes.
So unless the inflow into Vanguard S&P 500 turns negative, more and more money is going to go into these Magnificent Seven. So for it to really Magnificent Seven starts to fall, the passive funds have to stop. Worldwide, a lot of people are sipping into S&P 500. That S&P 500 has to stop. For that, there has to be a catastrophic event. That is why even the great Howard Marks says, this is not a bubble, but definitely they are elevated. And I think the first bubble to burst will be in Tesla. Because for the first time, his electric cars are not selling at the pace at which it should be selling. And people don't realize that Tesla is a battery company. It's not too much of a car company. Though in popular ideas, it's a car company. The profits are coming from its solar division. So, unless and BYD, the Chinese company, is selling more hybrid cars than electric cars. So, demand for electric cars is not as robust as it was. We thought the transition would be very quick. Nobody thought that the hybrid cars will do well. But it is not from petrol to electricity. The road from petrol to electricity is going through a hybrid route. And how long will that hybrid route last, we don't know. So Tesla is very vulnerable. I think Google is vulnerable. Not technologically. Google has the strongest technology. It will find a way of navigating it. I think Gemini will win the war finally. But now people are telling that search engine is losing market share and all that. Google is huge. Google is the internet.
Yeah, he's the kingpin.
He is the kingpin. And he has several modes. It's not one mode. YouTube is a mode.
Yes.
Maps is a mode.
Correct.
Ad is a mode. So he has 3 modes which you can directly see. And there are many more. But Google may correct. And I think Nvidia's bubble will burst. So in Magnificent Seven, I don't think Apple, Amazon and Google are not going to hurt so badly.
As much as the others.
Others will hurt more badly because Meta is dying. People are not using Meta. Right? They are not using Facebook as a product. Yes, Insta is doing well. WhatsApp is doing well. But Insta and WhatsApp will not
prop up the entire
earnings
required for Meta.
Meta. So the pain points are going to be in Meta, Nvidia and Tesla. If these crack, then I'm not saying it will crack, but this is where the pressure points will come.
Okay. The next question a lot of viewers have been asking is, now considering where the prolonged economic stagnation has been there in Germany and where the UK is sitting in its economic situation and looking how Japan is looking more and more attractive, is there a time when for the next 10-15 years can we say there's going to be a shift towards Far East? Do you think it's a time for the rising sun again? Do you think if we are looking at as a long-term investor, a lot of options are better in Far East compared to Europe?
No. All I'm saying is 2 things that has happened. Europe is stagnating. And there are not many European companies to buy. 2. China is being cornered by the Western democracies, which has given the Japanese companies a breath of life. And the fact that inflation has finally returned to Japan is cranking up. The Japanese machine is cranking up. However, there is a huge demographic problem in Japan. Unless Japan allows free migration and regenerates its population by injecting about 15-20 million outsiders, I don't think Japan is out of the woods. But the companies I am interested are Japanese companies which supply to the globe. These are global companies. They are headquartered in Japan, 1 or 2 in Europe, mainly in US. And these are not the Magnificent Seven. There was a time when I bought Google, but that was many years ago. I own Google, I own Apple. Bought many years ago, and I own some Japanese companies. Other, I look for undervalued companies even today. And if the S&P falls, I am more happy buying undervalued companies. In India, as far as I'm concerned, I own a lot of IT, but at this point of time, you cannot buy IT. It's too expensive. Even after yesterday's correction in Infi is too expensive. I am looking at pharma and FMCG in India. In FMCG, I'm looking only at ITC. And I'm looking at undervalued banks. That's about it.
Okay. Last question, which is about to do with the Bank of England and where stagflation fears are there in UK, because they have to keep interest rates high, though the growth is very weak. With America looking at possibility of cutting interest rates because their inflation is cooling off.
No, I don't think the American inflation is cooling off.
Well, there seems to be a split in America. Let me just explain. Let me just lay it out. There seems to be a split in thinking in the US. Economists, you're right, are saying we are nowhere near where we want to be in terms of anything. And looking at Trump, interest rates are not going to come down. Do not get overexcited about this. Lots of economists, like you're rightly saying, are saying. Meanwhile, the way the investors are behaving, they're seeing strong growth in the American market and earnings in the American market. At least in the short term, they're saying stock market is going to go leaps and bounds, and there will be probably interest rate cut also, they feel. And there seems to be a split. Correct?
I am on the side of the economists because all this growth is driven by fiscal deficit. And you cannot, in a time when the economy is growing, run such a big fiscal deficit. So the bond rates are not going to come down in America, which means there is trouble for countries like India and Southeast and China and other Southeast Asian countries, except Japan, because the Japanese believe their currency and they'll stroke it at low cost also. But all the other places, currency will move out of these countries, in the sense that $832 billion of foreign-owned stock is there, and they have sold only about this year only $15-20 billion. If they dump $100 billion, what will happen to your domestic institutional investors?
True.
So let's not have big dreams of de-dollarization and all that. This year could be a difficult year.
Okay, but what about UK? What I was talking about?
UK is a basket case. I don't have any.
Because a few months back we were talking about there being value stocks in.
No, I never talked about value stocks in England. All the English good companies have been sold. There's nothing in England.
There you go. A lot of you have been asking me about opportunities in UK.
England is a dead place. Except the good universities, there's nothing in England. Okay. Especially Oxford, Cambridge, London School of Economics. There are 23 Russell universities, of which 4 or 5 are very good.
These are only our humble opinion. Don't have to get excited.
The state of no new listing is coming in. The British Stock Exchange.
IPOs, yes.
No IPOs. Nobody wants to Britain. All the Indian, except Vedanta, all the Indian companies are listed in US. Why will I go to Britain? What is there for me?
So there you guys go. We kind of gave you a macroeconomic spread on this weekend on the Saturday. I hope you enjoyed it. It was nice having Anand come inside and do the intro like long ago. And I will definitely pull him in more, especially in the weekends, and have a conversation with you guys. Thanks for watching Be Rich as always. Do support the channel by liking and sharing. And do remember, me and Anand are also available, especially during the weekends together on Paisa Bolta Hai. During the weekdays, he's alone. That's a Hindi channel. Those of you who do like Hindi content, do go watch that and subscribe and like over there. It'll be very helpful for us with this algorithm. Nothing else more to say. Have a wonderful weekend. See you again tomorrow in another video. Bye.
Thank you for supporting Be Rich.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.